Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start this week's webinar, the Australian dollar has remained weak and the session in New York posted a fresh 5-month low of 75.35. Although the rebound has been very slight in terms of the low, we could still see another challenge of this 75.25 support. If we fail to see demand, then this would open way towards 74.5 as the next objective, or even towards 73.65.75. Any advances on the day looks to see resistance from 75.90 as minor, and a cap for this week at 76.20.35. A couple of things to note with the euro. For one, the market rallied last week and rejected that level of 118.50.70. Secondly, the market is now taking out the support at 117.55 after holding there last week at 54 with the low. To get this market bearish, we would need to see a break of 116.90. That on the flip side, the US dollar index still needs to recover after taking out the support of 93.80 to 94.10. A clear break of 94.25 on the index would give further scope for a bullish recovery and see the euro plummet towards 115.5. But first of all, we need to see the break of 116.90. The outlook for dollar yen has been somewhat concerning. As we can see this morning, we had a low of 86. The bullish foundations is at 111.60. I'm a buyer from this level and keeping my stop very tight. I do expect to see a rebound back towards the resistance either of 112.5 to 112.90 figure and reassess from there. Now if we do break beneath 111.60, this will give further concerns to the bearish case and expose a target of 109 and reassess from there. My view for the pound is still neutral as we still hold in this choppy range of 130 to 133. Although we did see a high on Friday of 132.60, the market did dissolve very quickly from the bullish recovery and now gives concern that we could see a target back towards 131.45.55. But as I mentioned, I'm neutral and this is only a speculative view that I'm holding, and at the moment I would not put any risk on until I get further confirmation from the technicals. But it is swaying slightly to the bearish case if you have a look at the RSI and also the MACD histogram. A very strong surge in gold over the price action on Friday with the $18 rally was triggered by the geopolitical uncertainty once again after North Korea ruled out negotiations with Washington on curbing its nuclear weapons program. The gold rally was its highest in the month of 1,296. We have dropped away slightly from there this morning. The resistance comes in at 97.99. This could be a little bit of profit taking if the market is slightly long, but I do expect to see further rally up towards 1,308 to 10. Silver outlook breaks through the resistance of 25 and now looks towards $17.45 after spiking a high of 38. It is viewed the market could actually claim its highs around $17.65, with any pullback finding support now at $17 figure 5. And to wrap up with oil, I'm still bearish, even though we have seen a rally on Friday. The rally behind that was that Baker Hughes reported a no change to the weekly US oil rig count. The previous rig count held at 738 in the week of November 17. Still much higher though than the rig count previously a year ago of 471. Nevertheless, that's still quite high if you take that in consideration and how much supply is actually coming out of the market. Therefore, I do expect to see a bear move once again, move away from $58 a barrel and look down towards 55.5. So that wraps up today. Thank you very much for joining me and I hope you have a wonderful start to the new week.